Welcome back everyone. Here at Alpha Finance, we're all about finding excess returns in the market and growing our wealth. Since time is money, I'll get right into it. Today, I'm going to be talking about BlackBerry, a software company which specializes on enterprise software, Internet of Things, and cybersecurity. I'll give a quick overview of what I'll be talking about, and there will be timestamps in the description in case you want to watch ahead, but I recommend watching the whole video to get a good overview. I'll start off by analyzing the company as a whole and how it transitioned from a smartphone manufacturer to a services company. Then I'll dive into some of the recent events that have happened surrounding the company that help us understand why this stock price has gone up so much in recent times. Beyond that, I'll then relate this increase in price to the short squeeze happening with GameStop and see whether or not that's what's happening with BlackBerry as well. And lastly, we'll look at some financials and how they've changed over the last 5 years and how that's affecting BlackBerry going forward. If any of this sounds interesting to you, make sure to subscribe and turn notifications on so you get alerted when my next video comes out. On top of that, thank you to all my subscribers for 100 subs. Let's keep up the pace and aim for 500 next. Let's dive right in. You may be most familiar with BlackBerry for their smartphones, which had massive market share in the mid to late 2000s and early 2010s. At its peak in September 2013, there were 85 million BlackBerry subscribers worldwide. However, BlackBerry lost this dominant position in the market due to the success of its competitors Android and Apple. Its numbers had fallen to only 23 million by March of 2016. Since then, in the last 4 years up until 2020, BlackBerry has been divesting from the smartphone business to focus on software and services. As of August 31st, 2020, their last phone, the BlackBerry Key 2LE, was discontinued. The company now focuses solely on business services and cybersecurity, which is an increasingly vital part of our world, so there's a clear need for this offering, and hence it makes sense why BlackBerry went for this pivot. Back in 2008, the BlackBerry share price was trading as high as $145 a share. However, over time, with it losing market share to its competitors, the share price continually fell, up until its low in March of 2020 with the market crash where it fell below $3. However, in the past 2 months, it's made a remarkable recovery. At the time of publishing, BlackBerry shares trade above $25 a share. So let's look at some of the recent events that led to this surge in share price. Firstly, on December 1st, 2020, BlackBerry announced a joint venture with Amazon Web Services to develop a cloud-based platform for the auto industry. More specifically, this is a multi-year global partnership to develop and market BlackBerry's Intelligent Vehicle Data Platform, IVY. BlackBerry IVY is a scalable, cloud-connected software platform that will allow automakers to provide a consistent and secure way to read vehicle sensor data and act on it. For instance, BlackBerry IVY could leverage vehicle data to recognize driver behavior on hazardous conditions such as icy roads and recommend the driver to turn on, for instance, traction control on the vehicle using that data. With sensor technology and safety being at the forefront of the automotive industry right now, I can totally see this being a market to be filled by BlackBerry and Amazon with this joint venture. On top of this, on January 25th, 2021, BlackBerry announced an expansion of its strategic partnership with Baidu. This partnership focuses on expanding Baidu's autonomous driving open platform. There's also been action surrounding BlackBerry's patents. Firstly, on January 15th, BlackBerry settled a patent royalties dispute with Facebook. Shortly after that, the company announced that it had sold 90 smartphone patents to Huawei Technologies. For me, these separate events are greater than the sum of their parts. Firstly, it's clear that BlackBerry is focusing on expanding partnerships in the software industry. On top of that, it's clear also that BlackBerry is divesting from patents that it had for its old business model. Therefore, when looked at holistically, it's clear that these events come together to outline how BlackBerry is pivoting from its old business model to its new one. Clearly, they are following the strategy path they had identified back in 2016, moving from a smartphone manufacturer to a software and services company. In order to do this effectively, they're going to have to build new partnerships, and they're going to have to divest from their old strategy's business line. Therefore, these events are very exciting for the company going forward. Now let's look at the price action over the last week and see whether or not the GameStop price action is affecting BlackBerry as well. One only needs to look at the WallStreetBets forum on Reddit to see the hype surrounding this stock. However, whereas the short interest on GameStop was 140%, it is only 17% on BlackBerry, so I would deny the notion that a short squeeze is the reason behind the price rise. Rather, I think the retail investors at WallStreetBets fundamentally believe in BlackBerry stock due to its strategy and fundamentals. However, one can't deny that over the last week, there have been an absolutely new flood of investors coming to sites like Robinhood and Trading 212, signing up to WallStreetBets on Reddit and investing in these companies. So I do think that could be partially what has pushed the BlackBerry stock up. So it would not be surprising to me if in the next few weeks, the stock price did fall back down to about the $15 level again. I could see this happening just as the sort of market euphoria ends as the GameStop short squeeze ends and as retail investors get bored of the industry again. If the stock price does fall down to a level like that, I'll definitely be loading up on some BlackBerry because I think this is a long-term stock that has a lot of potential as a software company going forward. Before I finish, I quickly want to go through some financials surrounding BlackBerry stock to help support the argument that this is a company that is turning it around. Looking at the chart I've put on the screen with financial ratios, some things I want to bring to attention in particular are the debt to equity ratio, which has been falling, as well as the different profit margin statistics which have been rising. In particular, the debt to equity ratio has shrunk by almost half and the gross profit margin has almost doubled. What this signals to me is that essentially BlackBerry is becoming a leaner and more efficient company. And while right now it may be making a loss, the trajectory for this company going forward is strong. It'll have a low asset base, low levels of debt, and high turnover with a high margin due to the fact that it's going to be in the software industry rather than in an industry where they actually produce a product like smartphones as they did in the past. To conclude, I think BlackBerry is an exciting company going forward as it transitions from its old business model to its new. It's clear that turning into a software company going forward will be better for debt to equity ratios as well as margins. So hopefully they can improve on this going forward and become a profitable company once again. Remember that this video is for entertainment purposes and not personalized investment advice. You should consider your own unique financial position before making any investments. If you enjoyed the video, I would really appreciate it if you would hit the like button, subscribe, and turn notifications on. See you next time.